Hello, this is Lance Zimmerman, and welcome to the Cattle Facts Closing Bell for Friday, July 8th. Today's top story, the implications of lower corn prices. To say the corn market has been full of surprises over the last month would be an understatement. Corn futures reached an all-time high of $7.87 a bushel on June 10th, only to decline 17% when the market closed at $6.50 a bushel at yesterday's close. The corn markets fluctuate considerably this spring and summer as the market reacts to any news that provides a picture of the current supply situation. Wet weather through much of the Corn Belt and early data on record-tight ending stocks drove the market higher. As planting progress improved, crop conditions were better understood. Also, $7 corn rationed supplies through much of the spring. The result were bearish grain stocks and acreage reports last Thursday from the USDA. The June 1st ending stocks estimate at 5.4% was higher than the industry expected, and it seems likely that that number will continue to improve throughout August. Corn acreage also improved from 90.7 million to 92.3 million acres. However, this news does not warrant an overly bullish attitude for the corn market going forward. Lower corn prices have made ethanol production significantly more profitable in the near term. Current fuel production's at a record high pace after gasoline futures rallied nearly 40 cents, and ethanol stocks in storage are at their lowest levels since January. Applying current market fundamentals to the initial work done by Iowa State University shows that ethanol producers will have a net margin of 25 to 35 cents per gallon through the first half of July. Corn export sales have been active with 1.5 million bushels booked for sale last week, and additional sales were reported this week. Currently, new crop bookings are already the third highest on record and will likely increase going forward. Cost of gains are also more favorable for feedlots, with both new and old crop corn futures prices around $6. Feedlots are looking at projected costs of gains ranging from 90 to 95 cents, around 30 cents cheaper than just a month ago. Despite the more favorable supply outlook, lower prices have made corn more attractive to buyers on all fronts. Expect December corn futures to find support at the $5.75 to $6 a bushel range going forward. Now, your weekly commodity markets. Higher live cattle futures provided support to this week's fed cattle market. Trade was still active at recording time, but prices seem to be $2 to $3 higher than last week. In the South, cattle have traded at $114.50 to $115 live. Sales in the North have been recorded at $115 live to $184 and even $185 dressed. Consumer beef demand after July 4th weekend has been better than expected. Boxed beef prices were around $1.25 higher this week, a 2-month high. A boxed beef price increase from the first week in June to the first week in July is a break from historical trends, which normally suggest a $2 break over that same time period. Feeder cattle and calf prices continue to improve, reacting to better than expected fed cattle markets and lower corn. Feeder cattle prices were $2 to $5 higher this week, and calves ranged from steady to as much as $6 higher, with forward contract sales for fall delivery picking up with video market sales last week. Cow slaughters maintained a record pace over the last 2 weeks on prices that were mostly uneven. The increase is led by herd liquidation in the South, currently 18% higher than a year ago. Corn prices were around 25 cents lower early in the week, but ended the week steady for new crop and 20 cents higher for old crop. Thanks for watching, and remember to visit cattlefacts.com for your latest market news and analysis.